I think we've seen probably two main themes during 2014. One was certainly a continued interest from institutional investors, both internationally and also within Europe, looking to increase their real estate exposure. So continued appetite for real estate amongst that group of investors. Again, a lot of that going through the direct route of acquiring assets rather than potentially investing in funds. But in a way, that's the second theme that we saw last year, which is, I think, the most marked change post-crisis for us in our industry, which is an increased appetite, nonetheless, for funds. And that was really the biggest change that we saw last year, as institutions increasingly seemed open to investing in new funds as well as existing funds. And that's a trend that we expect to continue during 2015 with increasing flows we hope towards those sorts of funds. I think the criteria and the discriminating factors, if you will, amongst investors remain pretty much the same. So you've got to have a track record in that particular strategy, ideally a team that's been in place managing that kind of strategy for some time, and then, of course, last of all, real estate. And I think investors are still a little nervous in some cases about blind pools. So where you've got an existing fund which already has a portfolio combined with those two other factors, you're increasing your chances significantly of being able to raise capital. That's an experience that we obviously had with our logistics fund, as you mentioned, where last year we raised over 800 million euros of equity, which was a lot more than we'd anticipated initially, and there was very strong demand, actually both from European and, again, international investors for that. But it was a fund where we had a 15-year track record. The same team that had originally set up the platform in '99 was still managing it, and a portfolio to start with as well. So those things certainly helped us last year in that equity raising.